Ladies and gentlemen, good day and welcome to the Solex Energy Q2 and H1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Hiral Keniya from EY. Thank you, and over to you, sir.
Thanks, Darwin. Thank you. Good evening, everyone. On behalf of Solex Energy Limited, I welcome you all to the company's Q2 and H1 FY26 earnings call. To discuss the performance of the company, we have with us from the management team, Mr. Chetan Shah, Chairman and Managing Director, Mr. Piyush Chandak, Whole-time Director, Mr. Vipul Shah, Director, and Mr. Hemal Kashiwala, CFO. Before we proceed with this call, I would like to draw your attention to the fact that today's discussion may contain forward-looking statements that are subject to various risks, uncertainties, and other factors which will be beyond management's control. We kindly request to bear in your mind that there might be uncertainties while interpreting such statements. We will now start the session with opening remarks from the management team. Afterwards, we will open the floor for interactive Q&A session. I will now hand over the conference call to Mr. Chetan Shah for his opening remarks. Thank you, and over to you, sir.
Good evening, everyone, and thank you for joining us today. On behalf of Solex Energy Limited, I extend a warm welcome to all investors, analysts, and stakeholders present on this call to discuss our Q2 and H1 FY26 results. I am pleased to announce that on October 8, 2025, Solex Energy Limited successfully migrated from NSE eMERGE platform to NSE Mainboard, marking a historic milestone in its journey of growth and governance excellence. Since its inception in 1995, the company has evolved from providing EPC solutions to becoming a manufacturer of reliable, high-quality solar PV modules. Over the years, Solex has strengthened its technological depth and expanded its operations from a small setup to a state-of-the-art, fully automated 4 gigawatt manufacturing facility in Surat, earning the trust of leading IPPs as well as commercial and industrial customers. This steady and disciplined approach to growth, built on quality, execution, and long-term partnerships, has firmly established Solex as a respected and credible name in India's solar manufacturing ecosystem. With this backdrop, let me now take you through our performance for the first half. The first half of this financial year has been an important phase in our journey of scale-up, execution, discipline, and strategic positioning in the evolving solar manufacturing landscape of India. During H1, we operated our production line 1 and line 2 at an effective nameplate capacity of 1.5 gigawatts, while our line 3 and line 4 capacities underwent installation and integration. I am pleased to confirm that both line 3 and 4 are now commissioned with total module capacity of 4 gigawatts and operational from October end, and the ramp-up is in progress as planned. This year, the monsoon season extended significantly beyond its usual timeline. Normal monsoon is 4 months, and this time it's almost a 6 months that it continues, which delayed site readiness across several IPPs and T&I project locations. Consequently, a portion of our finished goods remained in inventory at the end of the first half, which resulted in increase in working capital days and muted revenue growth during Q2 to FY26. With site installations now stabilizing and deliveries already underway, we expect this inventory to translate into revenue during the second half, providing strong execution visibility for H2 FY26. In parallel, Our order book continued to deepen in both scale and quality, with INR 4,000+ crores in total, inclusive of 100 crore coming from EPC orders as on 30th September 2025. We are privileged to serve a diverse portfolio of marquee national and international IPPs. Additionally, multiple master service agreements are in the finalization phase, and we anticipate formal purchase order conversion in coming quarter, further strengthening our forward revenue pipeline. We remain aligned with our earlier communicated growth outlook. With all core module lines now operational and delivery momentum improving, we are on track to achieve our targeted performance for the full year. Our focus remains on execution scalability, margin durability, and strengthening our long-term competitive position. On the strategic front, our roadmap towards becoming a fully integrated module-to-cell manufacturing player continue to progress. As shared in prior interactions, we are setting up 2 GW N-type TOPCon Plus solar cell manufacturing facility. I say TOPCon Plus, that's a advanced TOPCon technology, supported by our R&D collaboration with ISC Constant, one of the globally respected institutions in highly efficiency photovoltaic technology. The land for this project has already been identified, and work related to power infrastructure, water availability, and vendor technical engagement is in advanced stage. We are also progressing on the planned funding structure, and discussions are at the advanced stage with financial institutions. At Solex, we remain deeply committed to the vision of building a globally competitive, technology-forward, and sustainably viable renewable energy enterprise that contributes meaningfully to India's clean energy future. With the commissioning of our expanded capacity and the integration of advanced N-type technology ahead, we believe Solex is positioned to participate in one of the most exciting growth cycles in the Indian solar manufacturing ecosystem. With that, I will request our CFO, Mr. Hemal Kachhiwala, to take you through the financial performance in detail. Hemal bhai.
Thank you, Chetan sir, and good evening, everyone. As highlighted, the first half of FY26 reflects strong volume growth and meaningful improvement in profitability metrics. Let me walk you through the key financial highlights. For H1 FY26, we recorded total revenue of INR 4,157 million, representing healthy year-on-year growth of 51.8%. EBITDA margin improved to 14.7% compared to 9.6% in H1 FY25, supported by economies of scale and operational efficiencies. Profit after tax also strengthened to INR 305 million, with PAT margin rising to 7.3%, demonstrating the improvement in underlying business profitability. Working capital saw a temporary increase from 61 days in FY25 to 102 days in H1 FY26 due to the extended monsoon impacting customer site readiness. This led to higher finished goods inventory and raw material stocking for line 3 and line 4. However, with deliveries now initiated and full production ramp-up underway, we expect working capital to reduce to approx 80 to 85 days by the end of FY26. Our leverage position remains comfortable, aligned with the growth phase of the business. While the debt to equity ratio currently stands slightly elevated due to project-related drawdowns, it is expected to gradually improve as operating cash flow strengthens in H2. We continue to maintain prudent financial discipline and remain fully committed to maintaining an efficient capital structure. Looking ahead, with all four module lines operational and a strong order pipeline visibility, we expect performance in H2 financial year 26 to reflect higher capacity utilization and stronger cash conversion. Further, as we progress towards the launch of our N-type TOPCon Plus cell facility, our capital planning is in discussion as an advanced stage, and we will be aligned to our long-term value creation strategy. We believe Solex is well positioned for sustained growth, supported by robust domestic policy, tailwinds, accelerating solar capacity addition, and increasing the preference for high efficiency modules. With this, we now open the floor for your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. The first question comes from the line of Raghav Maheshwari, an individual investor. Please go ahead.
Hi, sir. First of all, congratulations on a great set of numbers. I have a
Thank
query
you.
that...
Can you speak, Raghu, can you speak a little louder because, the audio is...
Yes, sir. Yes, sir. So, first thing is regarding the dip in the sale for the quarter 2, which we have explained due to monsoon. But it has not affected other solar module manufacturers. So, is it that the deliveries is pending or the complete production is delayed because of the monsoon?
Yeah. So basically, I do not know about the other players, but the kind of orders that we are having with us, most of these orders are from IPPs, and their site readiness is a big challenge, and that's the reason we are piled up with the inventory. Production, there is no impact on production except for some slight reduction because of the storage issue. But I think there is no major impact on production. The production is as scheduled. And now delivery are also started, I think, so quarter 3 will have the reflection of improvement in the situation. So, the kind of order that we are holding right now, and they are not ready to take a delivery for the module because of the site readiness. And you can imagine, it was the monsoon. I think it's just a week time that there is no rain. Otherwise, there was a rain. And it started, in fact, 1 month before than the normal usual time in Gujarat. Normally in Gujarat, it starts 15th of June, but this time it happened from 15th of May. Yeah, that's what it meant.
Also to give more perspective, finished goods stock, triple charge. So to give you perspective, on 31st March 25, we had a stock of 25 crores. Whereas on 30th September 9, the finished goods stock is 153 crores. So this is ready for dispatch. And as Chitinbhai said, the dispatches have started. So I think whatever was lacking in the second quarter, we will be covering up in the third quarter.
Okay, sir. Got it. And sir, then one more thing, 2,200 crores. So, as of
Raghav?
now...
Yes, go ahead.
Yes, sir. Yes. Hello.
Raghav, your question was not very clear. If you could please repeat the question.
Yes, sir. I was asking, we have last Concall, you have said that we would be achieving around 2,200 crore target. So, is it still viable or we would be downsizing our target for this year?
So basically, we need to understand the cycle of RE business, annual cycle of RE business every quarter. This is not a business where you have a same number coming every quarter on quarter or the improvised number coming in every quarter. Typically, H1 is always low for every RE company, and then when it comes to H2, which is in multiples. So this is how the Solex is. So we are in alignment with whatever number that guidance we've given. And as mentioned before, we do have a strong order book, and these orders are to be executed before 31st of March and convert into revenue. So I think I have no, in spite of whatever the challenges that we had, which is reflected in H1, but we are confident of having achieving all the numbers which we have guided in H2, and then our annual results will reflect, our revenue will reflect on the same.
So to add on, line 3 and 4 is operational from October, and ramp up is going on. So we are very much with the numbers what we had estimated in the last call. So 1.5 gigawatt was operational for the first half year, and the full capacity of 4 gigawatt will be available for operation in the second half. So with the 4 gigawatt of panel manufacturing capacity and the order book in hand, plus the finished goods which was readily available for dispatch at the RK end, we are very much confident of achieving the estimated sales.
Yeah. So the guidance, revenue guidance, which was given considering the operation of line 3, 4 in H2 only. So now it is, these production lines are already operational now. Ramp up is going on. So the reflection of this line 3, 4 will convert into the revenue in H2. So I think we have at present, in a given a situation like at present, we are aligned with whatever the number guidance that we have given. Thank you.
Got it, sir. Thank you so much for your time. I'll join back with you.
Thank you. Participants who wish to ask questions may please press star and 1. Our next question comes from the line of Manan Shah from Moneybee Investment Advisors. Please go ahead.
Yeah, hi. Thanks for the opportunity. And congratulations on good set of numbers. So in the first half, we've seen a considerable expansion in our gross margins to almost 29%. What would be the key factors which has led to this sort of expansion in our gross margins? And is there a potential for these to further expand, and also on the sustainability of these gross margins?
Yeah. Hello, Manan. Vipul Shah this side. So as you are aware that, in the previous year or in the past year, Solex had a mix of OEM business and own brand. Whereas in the current year, the almost majority of sales has come from Solex own brand. So that is one thing which has added on the margin. Second part is with the economies of sales, we are getting the benefit. So that's the reason why the two factors have contributed to the increase in margin. Similarly, to answer your second question, like if you remember in the last investor call, we've been able to achieve the margins what we have targeted. Similarly, with the new line coming at the line 3 and 4 operational, and with the orders in hand and the operational efficiency, we are very much confident that the margin should improve from the existing level.
Understood. Got it. So what would be the mix between OEM and our own brand? And in the order book that you mentioned of 4,000 plus crores, again, what would be the...
Everything is...
Yeah, this time it is Solex, only Solex.
Only Solex. Understood. Got it. Also, my next question was, we recently signed an MOU with ISC Constant. If you can, highlight the importance of this MOU and how is it going to help the company in achieving their ambition towards these cells?
Yes. Also, basically, ISC Constant is a German-based research and R&D institute, which is very popular in the world. They are basically inventor of back contact technology. They invented this technology in 2018, and then they passed on to the few Chinese manufacturers like ICO and Longi. So they have that they are deep-rooted in terms of cell technology, making it more highly efficient, and they have expertise in terms of the operational part of module manufacturing as well. So we were in discussion with them quite for some time, and then idea was long-term goal is to have our own indigenized rear contact cell technology to be developed for Solex and cater it to the global market, not only India market. That's a long-term goal, and for that we are just working to frame the policy and the steps initiative to get into the R&D part of this thing in association with ISC Constant. Apart from this, the cell line which we are now introducing, which is the 2.2 gigawatt for Top One Plus, they are going to help us in terms of operational part of this Top One line. They will monitor the output and quality as a outsider eye, and they will guide us to ensure that we don't waste a lot of time in ramping up and achieving the highest efficiency through our cell line to ensure the better payback and ROI on a cell investment. And that is number 2. Number 3 is considering the future technology, which is the whole world is going towards from top cone, migrating from top cone to back contact, rear contact technology, and then tandem and forward side technology. They are like, helping us to devise our strategy and plan roadmap to when we should get into the advanced technology of cell manufacturing. So we have, as per our announcement, we are doing 10 gigawatt of cells, out of which 2 gigawatt we are doing immediately, and then the 3 gigawatt additional, and then 5 gigawatt additional. So this roadmap will be aligned with the technology curve and right technology at right time. That is how the ISC Concall is there with us in picture.
Understood. Thanks for the detailed response. My next question was, we keep hearing of, certain projects not able to secure PPAs and thereby shelving those projects. So has there been an impact on the demand side for the modules, and how do you see that, overall the industry shaping up going forward in terms of capacity and demand, or any risk of oversupply?
Okay. So basically, these are the temporary situations that we have. Basically, India is now, when you put up a solar plant or a wind plant or any renewable energy plant, there has to be, in parallel, there has to be some development on a transmission infrastructure as well. So government is working on transmission infrastructure to take care of whatever the generation happens at one place, and then taking it to the other corner of the country. So there are many, like Adani has already started working on 735 kV grid line. Reliance is also has started working on. These are the private sector. Apart from the government themselves, they are working on a national grid connectivity. So these are the temporary things which are being highlighted. In long term, there is a clear-cut visibility for the demand on solar. If you remember, till 2019, in India, we were doing like 8 to 10 gigawatt per annum for the renewable projects, which has increased to 30 gigawatt last year, and this year we are likely to close at 40 gigawatt. So you can understand the kind of increase in demand that we have it. And this, those 8 to 10 gigawatt, 95% were modules were imported. Only the 5% were supplied from the Indian factories. Now this 40 gigawatt is all 100% which is coming from the Indian factories. So you can understand the kind of demand and the consistency that we have it. Number one. Number two is there is another business which is coming up is the BESS. It's popularly known as a BESS. That is a battery energy storage system. So that means what? What battery energy storage system can do? What currently we generate in a daytime, and we have to consume in a daytime. So for night consumption, there is no supply from renewable energy. There is a very little supply from the wind, which is again seasonal, but no constant supply to the grid in a night time. BESS will take care of the feeding to the grid in night time also. Now, how BESS will work? BESS, people will charge their batteries in a daytime through solar, and then will feed, these batteries will feed to the grid in a night time. That means the solar panel requirement will double up in couple of years. So if we are doing 30 gigawatt, 40 gigawatt, currently with BESS, the business will increase to 60, 70 gigawatt. So I think there is a bright future in and demand also, for solar panels. Second is there are a lot of projects are now getting into the repowering phase. Repowering means the old solar panels installed, the old projects where they installed 200 watt peak panels or 230 watt peak panels, 250 watt peak panels. They are now in the replacement mode with the higher efficiency, because now we have almost reached to the 625, 650 watt peak range. So in Europe also there are many projects are getting into the repowering. In India also, Charanka, few projects are getting into the repowering phase. There will be additional demand coming in from that segment. So I think I don't see any challenge in terms of demand, or I don't see any challenge for a couple of years in terms of oversupply. I keep getting questions for oversupply because of the kind of capacity which is built up in India for the module manufacturing. But that is only module. The real capacity that will be, that will decide the future is the cell capacity. So I think there are many new entrants in module with a smaller capacity. They will, they will have to integrate with the larger people. Right now, whatever the capacity we are talking in India, some capacities are with the N-type modules. A lot of capacity is also with the old technology, which is monopole. So either they will have to close it or they will have to replace it. So most of the people, small players, will close it rather than replacing and reinvesting into this business, because the existing people have grown bigger, they have expanded. So a lot of market dynamics will change. But I am not. I am not of opinion that we have entered or we are entering into the overcapacity. Thank you.
Understood. And then on the export front, we recently gotten a large order from the Zalestra group. So are there more such opportunities in the export market? And overall, how do Indian manufacturers fare in the export market versus the Chinese competition?
So one thing I would like to clarify here is that Zalestra order is for the Indian project, not for the Zalestra is a Spanish company. They have a project in India, and so these orders are for the Indian project, not for export.
Okay. Understood.
And basically, as far as the export opportunity is concerned, yes, India has now greater opportunities. I mean, we hardly exported 500 megawatt in 2019. I'm talking about the pre-COVID era. And now I think we are exporting, India is exporting almost about 5 to 7 gigawatts per annum. And the opportunity that Indian manufacturing is 30 gigawatts per annum. So it is just like, some geopolitical situation which is currently, happening, like we are waiting to get settled down. And then Indian manufacturing have a great opportunity, particularly mainly in US. Europe is also coming up with some reservation or mandate for the Indian modules. So in my recent discussion with ISC Constance, they informed that there is a discussion going on. I think and most likely in a couple of months, they will announce some quota for the Indian factories. So I think that is another great opportunity which is coming up for the Indian companies to export outside India. So definitely India has a potential to export from 5 to 7 gigawatt to 30 gigawatt. It is just a matter of few months, I think. Let's wait. Let these two countries, US and India, to settle, amicably in benefit of both. And then, but we have already, as a Solex, we are already eyeing on this market. We do have a smaller presence in this market. So once we are ready to export, I think we will have sizable number coming from the export business as well. Thank you.
Okay. And the incremental 2.5 gigawatt capacity on the module side that we are looking to add next year, should this come online in the first half or the second half?
By the end of first half, that is what we are targeting. Somewhere between April, March to June.
So then the targets that we are targeting for next year, that I believe was on a base of 4 gigawatt capacity. Assuming, say, you have another 6 months of this incremental 2.5 gigawatt, there is a potential for an upside in the next year's target then?
Yeah. So basically, next year, whatever that numbers that we have given, that is considering only 4 gigawatt of current present facility. Once we are rolling out our new addition of capacity, we will upgrade with, we'll come back with our enhanced numbers.
So again, we are working on whether to do it in Gujarat or some southern part of the country. That strategic decision is underway. So maybe as and when that decision is taken, we will give some light on the revised number.
Understood. Thanks. I'll get back in the queue.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one if you wish to ask questions. Our next question is from the line of Devrat Himatsingka from Augmenta Asset Management. Please go ahead.
Congratulations on a good set of numbers. Just wanted to understand what the status on the cell line is. And, we were planning to install a cell line. So when can we expect the cell line to come in? And, have you procured the land for it? What's the current status on it, sir?
Okay. So, basically, as informed earlier, we want to commission our cell line production, which is 2.2 gigawatt anti-TOPCon plus with anti-TOPCon plus technology by March 2027. That is our target line to commission this line. Now, to achieve this milestone, we already have a experienced team in place. We are working with on a multi-front and working on the technology front, which is discussions are almost. We have already identified which technology to go in for in terms of equipment from China and Germany. So we are on the verge of closing this discussion. Number two is, as far as the site is concerned, we have already identified 2 sites. The biggest challenge and what we have seen experience from the other companies, those who are getting into the cell manufacturing, is electricity, availability of electricity, considering the future growth, and the availability of water. These are the 2 major challenges that every cell manufacturers are facing. Those who have not taken this thing seriously, at present they are facing problems on operational front. So after identifying this land, we are in discussion with the electricity board for the visibility of availability of electricity power for 5 gigawatt and availability of water, which is almost to the tune of 2 MLD at present, and then 5 MLD later on once we reach 5 gigawatt. So this kind of, otherwise, we just right now something is available, and then for our next expansion it is not available, so it will be problem for us. So we are ensuring the future availability of power and water both. So we are not dependent only on the groundwater like others. We are basically considering the canal water and groundwater both. So we do have certain sites which are like near to the canal where the availability of water is there, and then groundwater as well. So this is the status. On a technology front, as I said, IIT Constance and other couple of experienced manufacturers are working with us, and so this we will be able to close very soon. On funding side, we are, as it was informed, we are at a very advanced stage to raise funds for the procurement of land and equipment and the civil work and everything with a few financial institutions currently. So that also we will close it very soon. So this is the status of this thing. Once our readiness is such that once we do have the clarity about these 3 factors, the funding, the land, availability of electricity and water, our execution time will be much shorter than other players. Because on paper, everything is ready. It is just a matter of execution and implementation. That's it. Thank you.
Okay. Thank you so much, sir. That's very good to hear.
Thank you. Ladies and gentlemen, you may press star and 1 if you wish to ask questions. Our next question comes from the line of Naveen Bansal from Paradise Moon Investment. Please go ahead.
Yeah. Hi, sir. Naveen this side. First of all, very, very congratulations for the good set of numbers.
Thank you, Naveen.
Sir, my first question is, so for the cell manufacturing, how will be the debt structure and the equity structure? How you are planning to raise the 1,100 crore, 1,200 crore?
Yeah. So Naveen, as we have said, we are targeting a total CapEx of 1,500 crore, which includes 1,200 crore for the cell line, 200 crore for the proposed module line, and 100 crore for the working capital. So the total 1,500 working capital margin. So out of 15 crore, 1,000 is coming from bank debt and 500 crore we are raising from equity.
Equity through QIP, no?
Yes. We have all.
Oh.
So we have the advance. We have freed the banker, and we are going to close the engagement letters this week.
Okay. So market cap would be increased by 500 crore if you, after the QIP round, right?
Yeah. So.
Yeah. Okay, got it. And second question is, sir, in last call you mentioned that top line would be in the range of 2,000 to 2,200 crore. But in first half, it's only 415 crore. So, are you hopeful to get the balanced revenue in the next second half?
Yeah. So I'll just give you the detailed idea about this. Guidance was somewhere nearing to 2,000 crore, 2,000 to 2,200 crore, and which was based on the commissioning of our line 3 and 4. Now, these line 3 and 4, they are high-speed lines with 2.5 gigawatt capacity, right? So the major capacity expansion has happened now. And so the H1 was with 2 lines only with 1.5 gigawatt. And so, and then we have had a monsoon. So basically, I don't have any challenge. We are as per our schedule. Only situation that we have faced recently is delay in deliveries because of the extended monsoon and site readiness problems from our customers. And that is the reason the inventory is piled up and which is now getting released slowly now, and I think by 20th of November, all sites will be ready and then we will get into the delivery schedule. And once we deliver, then only we can invoice it and book it in a revenue. So slightly lesser revenue in H2 is just because of the extended monsoon and inventory which is piled up, not delivered goods.
Second thing, GST also had played a role. The GST on modules has come down to 12 to 5%. So a lot of billing and dispatches are pending because for that week, and it got implemented from 21st of September. So that has also played some role in billing and sales.
Got it, sir. Got it. And sir, this time your margins, I think this is the quarter where your margins are very high. So, if in future the same margins will be sustainable or not?
So basically, I think because now we do have an extended capacity and a lot of production and deliveries will happen, we are hopeful to, improvise on this margin. But as guided, we will stick to our 6 to 7% of our PAT. But then, with this efficiency, we will improvise it.
Okay. Got it, sir. Thank you very much for the answer. Thank you very much.
Thank you. Our next question is from the line of Mihir Desai from Desai Investments. Please go ahead.
Thank you. So firstly, on the order book, I just wanted to understand the current order book exceeds 4,000 crores, including EPC orders. So what is the execution timeline and, how this will convert into revenue, say, in next 2 years?
So the 4,000 plus crore order book, which is to be executed in FY26 and 27. So there are certain orders which we have to deliver in FY27, and certain orders we have to deliver in FY26 before March 31st.
So, the entire order book is distributed in 4 stages. So one is where the POs are, we have received the POs and which we have disclosed on the public platform. That is where we have signed the confirmed master sales agreement, MSAs have been signed, but POs are awaited. And the third stage is where we have the finalization of signing the MSA. So 3, and the fourth is the ongoing. So the order book which we have said consists of 3 parts. Confirmed POs, second is where the MSAs have been signed, and the third parties where we are about to close the MSA.
Okay. So, what will be the portion of where we have signed, sir?
Sorry?
So the portion where, which is executable and the revenue is visible, say in next.
Can you just speak little louder?
Yeah. So I just wanted to know that, so what are the portion of order currently, where the work is WIP, and we can start seeing the revenues in, say, coming quarters or years?
Yeah. So we have a finished goods of 153 crores as on 30th September 2025, which is immediately available for sale in the third quarter. And similarly with the line 3 and 4 operational. So that's the reason you are seeing the first half, as Jitendra mentioned, like the sales was not there because of 150 crore inventory there. So obviously that will happen, plus the add-on inventory. So there is nothing like WIP, it is finished goods, because WIP is the time is very less for WIP in our industry. So either it is a raw material or it's a finished goods. WIP portion is very less.
This is talking about WIP orders.
WIP orders,
okay, for March we have paid. Yeah. So this WIP orders, the quantum is almost somewhere about 1,300 CR. That is what we have to deliver before 31st of March, besides the existing inventory. So if you add our existing inventory, then it is somewhere about 1450 CR.
Okay. Thank you, sir. Sir, on the macro front, I wanted to understand that is there a shift in customer preference? Say, are they moving from, say, N-type modules versus PERC? And if it is so, how it will influence our selling prices and gross margin trends?
Yeah. So basically, N-type modules are now more stable products, and it's in demand now. So the demand for P-type modules are decreasing, and demand for N-type modules are increasing. And that's the reason, we have gone for N-type module lines, and we were the first company in India to launch G12R modules last October. So, and that is the most successful product in India. Most of the IPPs and CNI customers, they are going for N-type modules only. P-type modules, that is monoPERC modules, are more popular into the domestic content market, which is a residential rooftop and those segments where the DCR content mandate is there. So definitely the demand for monoPERC is going down. Demand for this, but when it comes to margin, there are no major changes in terms of a margin compared. In both like monoPERC and this thing, margins remain same, and we still have some order for monoPERC. After finishing those orders, we will migrate our existing line 1, which is a monoPERC line, to the TOPCon line to meet the additional demand for the TOPCon model.
Okay. So lastly, I just wanted to understand, if I just keep the quarterly part aside, how do you see as a company, as a Solex, how investors should look at you in 5 years down the line? So what is the aspiration and, the vision of the company, if you can explain us?
Yeah. So basically, that's a very good question. In fact, there are many players. So, and we always say we work differently than other manufacturers. You can see our journey in last 2 years. We were heavily into OEM, making friends, for our competitors are our friends, and we were manufacturing for them. Almost 28 Indian companies and 2 multinational companies. We are manufacturing modules in our facility for their projects, critical projects, which has built credibility in the market for the Solex quality, Solex processes, Solex traceability, and the stability in the market for Solex modules, and which has led to 100% of our production going for the Solex modules. So that is the great transition, which has happened. So basically, we have won the trust of our competition also, and that is basically a key point for Solex. We are basically into, we believe in technology. We believe in adopting technology, at the early stage. That is what the Solex philosophy. And we are very professionally into the manufacturing. So basically, when we are talking about 30 years of product warranty, and when we say we don't make rocket in our facility, we are manufacturing modules like other companies. They manufacture modules. So what is that differentiate Solex compared to others? That is a very highly focused and investment into the technology, into the quality process, into traceability, working with the global leaders to adapt a new method of manufacturing with more reliability, getting certifications internationally for the reliability of products. These are the USPs of Solex, and that will differentiate Solex in coming 5 to 10 years compared to others.
Got it. Thank you. All the best, sir.
Thank you.
If I have questions, I'll come back in a case.
Thank you. Participants, if you wish to ask questions, you may please press star and one on your touchtone telephones. Our next question is from the line of Manan Shah from Moneybee Investment Advisors. Please go ahead.
Yeah, hi. Thanks for the follow-up. Sir, this inventory of 150 crore which got rolled over, has that already been dispatched or it is getting dispatched as we speak?
It is getting dispatched because the sites are now getting dry and getting ready. So slowly it is getting dispatched. So as I said, by end of November or maybe the first week of December, we will be able to dispatch everything. Most of the sites are in Rajasthan, in Gujarat, and these sites, like we had a lot of rain. Even if you look at Khavda is still not ready because of the situation there. So the situation was bad, rain and everything. And people are working, all the EPC companies are working, IPPs are working so hard because they also have to meet their COD, the deadline. So, we are working very closely with them to align our delivery plan and future production plan also.
Understood. And for the cell line, as you mentioned, the importance of water and power availability, for the site that we have identified, do these sites have the necessary availability of these resources, or we are still communicating with the respective authorities to ascertain that whether these would be available?
So primarily these things are available. We are discussing with them for the future availability because for 2.2 gigawatt module, those things are power and water is available. Right. At one site, water is available for even 10 gigawatt also. So we are just discussing with them that after 2 gigawatts, since we have already decided to do 3 gigawatt at the same location, whether they will be able to provide us extended additional power and water to this site or not. That is something which is, we are discussing, and we will get a reply because, they need to go through many departments internally to give us the confirmation. And this is a big investment, so we just do not want to jump into anything just on a verbal confirmation. So primarily 2 gigawatts, everything is available. We are just waiting for their go-ahead for the additional 3 gigawatt at the same place.
Understood. So, should we expect the land deal to conclude before the end of the calendar year, or do you think it will happen maybe in January, February?
No, we will conclude it before the end of the calendar year.
Understood. And for the incremental 2.5 gigawatt of module capacity, I believe our current area is exhausted. So this incremental capacity will also be coming on this new land parcel only?
No, we are working on options in this. One option is that we acquire some more space in our existing factory, adjoining to our existing factory, and we establish this. Another option is that we establish 2.5 gigawatt in a place where we are setting up cell line. Third is we are exploring some opportunity in southern part of the country because there are a lot of we are already servicing few customers in south, and the south demand is increasing. There is a big challenge in terms of logistic time and cost, and that's the reason there are one thought is that why don't we establish this production line in somewhere in south. So that is we are working on 3 options, and line design and everything is already done, finished. We are just waiting for this location to get finalized so that we can implement our project 2.5 gigawatt model also.
Understood. And on the employee cost, I believe since we were about to commission our 2 new lines, we must have hired higher employees, which is visible in the employee expense as well. So basically, just trying to understand that in the second half, as all the lines get commissioned and our revenue also scales, there is a potential of better absorption of our expenses and thereby higher EBITDA margins as well, right? Is it possible that we can achieve, say, 16 to 18% sort of EBITDA margins in H2?
Manan, as we said, obviously with the increase in the scale of operation, and you can see the turnover what we are going to achieve. So obviously, we feel that we are going to surpass what we have achieved.
Understood. Yeah, thanks. That's all from my side.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1 at this time. Ladies and gentlemen, we have no further questions. On behalf of Solex Energy, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.
Thank you so much. Thank you, everyone. Thanks for taking interest in Solex.